Appreciate you taking some time. I know it's been a busy week for a lot of you. Today we're here to talk about tax extenders. My name is Adam Schifris. I'm the co-director for Legislative Strategy, Committee for Responsible Federal Budget. It's my pleasure to introduce Naomi Jagoda, tax reporter for The Hill. She's going to be moderating our panel, and she will be introducing our panelists. For you folks in the back, they're getting some more chairs, so just hang tight. Naomi was previously at the Washington Bureau of the Bond Buyer and the Washington Examiner. She has experience at the Philadelphia Daily News, USA Today. She graduated summa cum laude from University of Pennsylvania, and she does fantastic work right now at The Hill. Without further ado, the floor is yours, Naomi.
Welcome everybody. Welcome everybody to today's. Is this on? Welcome everybody to today's event about tax extenders. We have a whole group of panelists here who come from groups that represent a wide array of the ideological spectrum, but these panelists kind of all agree that they think that these tax extenders shouldn't be renewed. And it's interesting that there is such a diverse coalition of people that have the same opinion on this specific issue. So I'm going to give each of the panelists a chance to just give an opening statement, and I'll start with the person closest to me, Marc Goldwein from the Committee for Responsible Federal Budget. He is the Senior Vice President and Senior Policy Director of the group, and he previously was involved in the National Commission on Fiscal Responsibility and the Super Committee. Go ahead.
Thank you, Naomi. Thank you, everyone, so much for being here. I'm really excited on a Friday when it's 100 degrees out that people are here not for the free air conditioning, but to hear about tax extenders. When I started working in this town in 2007, one of the first events that I put together was at the time on the alternative minimum tax, the AMT. At that point, we were patching the AMT every couple of years or every year. Because it was hitting more people than we wanted it to. And one of the major concerns is that every time we passed a popular middle-class tax cut in the form of an AMT patch, these tax extenders would ride along. These very unpopular, mostly business giveaways that were passed 1 or 2 years at a time. So a few years later, we solved that. We permanently fixed the AMT. We later nearly repealed it. Then 2015 came along, and we still had these very popular provisions, the research and experimentation tax credit, the deductibility of the sales tax, the same way you can deduct property and income tax. And there was still this concern, these popular provisions were letting these special interest provisions ride along. And every year or two, we were renewing them 1 or 2 years at a time. So in 2017, members of Congress and the President at the time came together, Republicans and Democrats, and agreed we are going to solve these tax extenders once and for all. We're going to pass the PATH Act, which is going to make the provisions that we all support permanent, and is going to make the provisions we don't support, put them on a path towards expiration, a 2-year path towards expiration. Now, unsurprisingly, to those of us who observed, that expiration didn't fully last. We extended those provisions one more time again. But this was supposed to be the very last time, because after this extension, or around the time of this extension, we had tax reform that was going to create a totally new tax code. And it turns out this time it actually worked. Why do I say that? Because for the last 19 months, those tax extenders have been expired. The tax extenders I'm referring to mostly expired in December of 2018. We are now almost in August of December of 2017. We are now in August of 2019. Those extenders, which we now call the zombie extenders, because they're dead, they've been dead for over 1.5 years, but they keep wanting to come back from the grave, have been expired for 19 months. And yet, folks still want to bring them back. And not just bring them back to the future, but bring them back retroactively to offer important tax incentives to change our behavior over the previous 19 months. Fortunately, I think for the public interest, a number of groups from the left and the center came together and said enough is enough. The Committee for Responsible Federal Budget, Americans for Prosperity, Freedom Partners, Institute for Taxation and Economic Policy, ITAP, Economic Policy Institute, US PERG, Heritage Action, Freedom Works, Progressive Policy Institute, Competitive Enterprise Institute, the Concord Coalition, and the Tax March all came together. All 12 groups, some very far left, some very far right, some very far center. But we all agree that it makes no sense to pass tax policy 2 years at a time, retroactively, for special interest tax breaks to just keep adding to the deficit. And the rest of my panelists are going to tell you why we all agree with that. But I hope that those of you that are in full offices, that your bosses will agree as well.
Next up, we have Ben Ritz. He is the director of the Progressive Policy Institute Center for Funding America's Future. And he previously was at the Bipartisan Policy Center and worked on their retirement issues, and also worked on issues such as the debt limit, which is a hot topic right now.
Yes, it is. So I think before talking about why tax extenders are bad, it makes sense just to quickly go over what we think are what a good tax policy looks like. And I think there's 4 traits that good tax policy should have. The first is you want it to be relatively simple. You don't want businesses to be spending hundreds of hours and thousands of dollars trying to comply with the tax code. You want them to just do their business, pay their taxes, and move on. So simplicity is important. Next thing is you want it to be fair and non-distortionary. You don't want businesses to be making their decisions based on what the tax code does, unless there's a specific thing you really think that you want to incentivize. As much as possible, we want the tax code to treat every activity fairly and let businesses operate the way they should based on economic decisions. You want the tax code to be predictable so that businesses and individuals can plan their activities in the year ahead, knowing what their tax rate is going to be, as opposed to trying to have to guess what policymakers in Washington are going to do. And then finally, perhaps most importantly, tax code needs to raise enough revenue to pay for government services that we all need. Tax extenders fail on all of these measures for basically the reasons that Marc said. They're very in the weeds, they're complicated, they're not particularly fair, they favor special interests over others, and they're another unpaid for tax cut. We just had a round of unpaid for tax cuts 2 years ago in 2017. We don't need to be adding to them even more, especially when, as Marc said, these are retroactive extensions. They won't be incentivized, even though they are preferencing certain groups and certain behaviors, it won't actually incentivize any behaviors because those behaviors have already happened. And I'll close my opening with one of my favorite tweets on the issue, which John Arnold tweeted in 2017 as this debate was beginning. Corporate lobbyists descend on DC, warning lawmakers that if they don't renew the retroactive tax breaks that expired in 2017, companies will have to lay off employees last year. I think that basically captures the absurdity of these extenders. And when we already have, especially with the tax bill from a couple years ago, we have all these provisions up in the air. I don't think it makes sense to be adding to them further and further increasing the deficit with these unpaid for tax cuts.
Next up, we have Adam Michel from the Heritage Foundation. He focuses on tax policy and the federal budget. He previously worked at the Mercatus Center.
Thank you all for being here. The tax extenders are not just bad tax policy, they're bad budget policy and bad economic policy. We've heard about how bad retroactive tax extenders are, but even if they're not retroactive, the temporary nature of these incentives is also cutting against their intention. Even if you think something like the paid family leave tax credit is good policy, there's no way that a 1 or 2 year tax credit is going to incentivize a large business to set up a brand new leave program. This is simply just a windfall for businesses that already have these programs and isn't doing a whole lot else. They're also just corrupt giveaways to well-connected industries. Basically all the environmental and energy provisions in the extender package fit this bill. And my favorite example is the alternative fuels credit. There's been some good reporting around this where oil companies are able to claim this credit, or have been in the past, for butane, which is a byproduct of refining oil and something that has been around forever. So these credits are simply not well targeted and giveaways to big industry. But I think the thing that we don't talk about is we focus on the temporary nature and the retroactivity, but the credits, even if made permanent, are still bad economic policy. Washington has a horrible track record of picking winners and losers. We think about the energy sector. Businesses are best able to innovate when they are meeting market demand, when they're responding to market incentives, instead of responding to the various levers that Washington is pulling and throwing at them. So the tax code should ultimately be neutral across the board, and the tax extenders are a perfect example of that not being the case. So these provisions are ultimately packed together in one package because no one of them can pass the muster of passing on its own. Politicians, all your bosses know that these are generally bad policy, and that's why they happen on a short-term basis and are all added together. So I think the solution is easy: do nothing, and the tax code gets better, and we save some money. So that's where I'll leave it. Thank you.
Next up is Michael Farquharson. He works at the 2020 Vision. He's an economic policy analyst there. And before that, he spent time at the Atlantic Council.
Thanks, Naomi. And thank you all for coming today. A special thank you to Marc and the team at CRFB for having me here today and for organizing this event. So many of the extenders that passed through the House Ways and Means Committee last month have been expired for a year and a half, like we've been saying. This practice, again, is not fair to businesses and individuals that need certainty in the tax code. Also, by retroactively extending tax credits, we defeat the whole incentive nature of a tax credit. The, I think, roughly 30 or so expired 2017 provisions have been dead for a year and a half without any noticeable effect on industry. Perhaps these industries think that it's a sure deal that the credit will eventually get extended, but it's not a given that they will, and these activities have already happened. So Congress is essentially providing a windfall for mostly narrow special interests at the expense of the public interest. Temporary tax provisions intended to address temporary needs make sense to me. Natural disaster relief, etc. I feel like nobody can complain about that, but tax breaks for racetrack owners, racehorses, alternative fuels, etc., they don't fit into this category. So, and Congress has had multiple opportunities to make these permanent. So, and they haven't decided to do so. So why now? I think there's benefit to trialing certain incentives on a small scale for a temporary period, but the tax extenders process essentially turns these temporary measures, and they were intended to be temporary, into de facto permanent tax policy. I think many would fundamentally agree that this is not an optimal way to do tax policy. And so these extenders really are at risk of being retroactively renewed simply because of the nature of the credit or political bias toward a particular industry, which is just terrible. Another major issue with extenders in general is that the CBO, with one exception, has to assume that temporary provisions expire when scheduled when they make their baseline budget projections. So if these extenders get resurrected, not only do they reduce federal revenue with questionable economic effects, they essentially distort baseline budget projections. I think this is really one of the more egregious outcomes of pretending that these provisions are in fact temporary. I think we should focus more on the bad process rather than the policies at issue, in part because the 2015 agreement on extenders made permanent many of the largest and most important politically expiring provisions. So I think that what we have now with these zombie extenders from 2017 is really a hodgepodge of less important provisions that mostly benefit narrow special interests. So you could say that the stakes are lower now than in 2015, but I think that leaves us with an opportunity to make the right decision. So what's next? It seems that at present the debate over these extenders might continue into the fall. I get the impression, working with officers on the Hill, that there's more focus in the Senate than in the House. There's a bunch of working groups set up to look at different extender policy areas. But nevertheless, I do remain hopeful that members of Congress will see the growing momentum witnessed here today, and the bipartisan momentum. And in the age of the $1 trillion deficit, I think that both parties can get a symbolic win by leaving these zombie extenders dead and buried. Thanks.
Last but not least, we have Russ Latino. He is Vice President of the Economic Opportunity Portfolio for Americans for Prosperity. In the past, he's been a civil litigation attorney.
Thank you guys for being here. I do think that this is a very important discussion for a lot of reasons, and I really appreciate Marc and the work that the Committee for Responsible Federal Budget's done in putting this together. I will mention, I got an email from Dan Rothschild 2 minutes ago as you guys were talking. Dan is the Executive Director of Mercatus. It happens to be my birthday today. That's not for you guys to tell me happy birthday. But he had a copy of the agenda from today, and he forwarded it to me and said, you guys, you really know how to celebrate your birthday with that tax extenders thing. Most Americans today believe that the economy is rigged against them in such a way that a majority of Americans report they either believe that the American dream is dead or that it is in the process of dying. So 62% of Americans in a recent poll said it's rigged against them. That perception in large part is created by policy that appears to favor people and industries that are well connected at the expense of everyone else. And because of that, trust in public institutions has been dramatically undermined. And we see that in our tax code, we see it in subsidies, we see it in the regulatory code. In 2017, when Congress decided to reform the tax code with the Tax Cut and Jobs Act, whether you agree with that policy or disagree with that policy, the putative reason for doing it was to simplify our tax code, was to take away a lot of those provisions that made it complex, that made it less than transparent, that made it seem like the government was putting its finger on the scale to favor some at the expense of others. And in exchange for that, what government offered industry and business was a substantially lower rate that was meant to treat business the same way to generate economic activity. 19 months later, rates having been lowered, our economy pretty strong, we're having a conversation about whether or not to recomplicate our tax code. We're having a conversation about whether or not the industries that benefited from a low rate across the board, for certain special industries, whether or not they can have their cake and eat it too, with additional benefits. And at Americans for Prosperity, we think that's fundamentally wrong. We think that it goes against those basic tenets of what is fair tax policy that have been talked about. And we do think, to Adam's point, that it's corporate welfare. And so as an organization, I don't have a lot to add because these gentlemen have done such a great job of explaining the fiscal and tax and economic impediments associated with this policy. But as an organization, we're dedicated to making sure that the public understands, one, that there's reason for them to believe that the system is rigged against them, but there's something that can be done about it. And so we started a campaign that Marc wanted me to talk about called Unrigging the Economy, and a component of that campaign centers around tax extenders. And we've been sending out mail in roughly 40 congressional districts across the country. We'll continue to do that. We've been running digital ads in those districts as well. And just very recently, we brought our state directors. Americans for Prosperity has 35 state chapters across the country that engage in permanent grassroots activity. So we brought our state directors, deputy state directors, up to Washington to have conversations with their members and did over 300 Hill visits on this subject and a couple of others. We think it is vitally important, not just because of what it does to the deficit, not just because of its role in distorting the tax code, but we think it's vitally important as a part of a cultural conversation. And that's why it's so exciting to see such a broad range and array of organizations here today that have a lot of differences of opinion on a lot of issues, but that agree that this is really egregious policy and we should let the dead remain dead.
So one of my first questions for you is, do any of you see any value in maybe extending any of these provisions, maybe prospectively as opposed to retroactively?
I think that there's sort of three buckets of tax extenders. There's the things that the Tax Cuts and Jobs Act made obsolete. So there's a whole bunch of expensing provisions, things that allow businesses to write off investments, cost of investments earlier rather than having to wait over a long period of time. TCJA did this for all investments, or for most of the tax extender categories. So we no longer need those. Same thing, there's 4 different economic development subsidies in the extenders. The TCJA has a new program called Opportunity Zones, and whatever you think about Opportunity Zones, I have to think it's not necessarily such a great program. We don't need 4 duplicative economic development subsidies on top of Opportunity Zones. And then there's a whole list of subsidies that are just plain and simple subsidies to industry or various different types of activity that individuals carry out. And then there's the credits to lower the excise tax on alcohol. And tax credits are an incredibly complicated way of getting at a good policy goal of lowering an excise tax, and it certainly shouldn't be attached to all of these other sort of crony carve-outs in the tax code, which have a separate debate on its own merits.
Marc, did you have something you wanted to say?
No, I mean, I think that there are, if I'm king of the world, there are a few of these expired or expiring provisions that I might want to make permanent in the code. There's none, there's either 0 or 1 that I think there's justification for doing on a temporary basis. There may be some justification for mortgage forgiveness as we're kind of closing out the last recession. But overall, Congress had their chance to decide which one of these should be permanent. They had 2 chances, in fact. They had the chance in 2015, and they had the chance in 2017. And they debated that tough, and they came up with an answer. And I think that we should respect that, at least for those extenders that have already expired.
What would you guys say to some of maybe the business groups or whatnot that come before Congress every year and push for getting these renewed, saying like it helps them, plan or whatever for the future?
Well, I would ask those business groups how that's worked out for them so far, given that, like we said, they've been expired for a year. They still don't know whether they might come back for a tax year. And I mean, we're not just talking about, what's going to happen with this year, which is already more than half over. We're talking about what happened last year. Everybody, I know some businesses might have filed extensions, but we all paid our taxes on April 15th this year for the tax year that happened last year, and now we're talking about provisions that would reopen the books that supposedly were already closed. So I would say that if you're planning your business around tax extenders, you might want to do a better job and not bank on these things that clearly are not reliable.
And of course, businesses want the federal government to send them a check. Like that, they're always going to come up with a reason that they need to be subsidized and other people don't. So there's various sort of public interest reasons why we want a simple tax code, we want to get rid of these. But of course, the industry that's getting this special favor is going to tell you why that's a good thing. You just need to understand that it's most likely not.
Some of you, a lot of you have brought up the Tax Cuts and Jobs Act. Some of you like that bill, some of you don't like that bill. But I guess for all of you, how does the passage of that legislation influence your thoughts about tax extenders?
Sure. I mean, so put me in the category of someone that didn't like that bill, right? There were elements of that bill that I thought were really, really important. So I thought that it made sense to get the corporate rate down from 35. I thought it made sense to cap the self-deduction and really push people out of their mites into the standard deduction. But overall, I didn't like it. That said, for both reasons that I didn't like it and reasons that I did like it, it actually provides more of a reason to make these extenders dead. For one, as Adam pointed out, it created a number of broader benefits to help these companies, including opportunity zones, including full expensing, including a lower rate, making these extenders less important. Number two, it gave us another political opportunity to decide which extenders to keep and which ones not. And they decided, actually, not only did they want to keep bonus depreciation, they wanted to expand it. That was a decision we made in 2017. And then lastly, it blew a $2 trillion hole in our 10-year deficit projections. And now that we're $2 trillion worse, I think there's an even weaker case to blow that hole further with more tax cuts. So for both sort of the good reasons and the bad reasons, I think it weakens the case for tax extenders.
So we clearly were in the camp of being supportive of the legislation. Continue to be supportive of the legislation. Think it's having a lot of the anticipated impacts, but that's maybe a conversation for a different day. for all of the reasons that were undergirding the passage of the Tax Cut and Jobs Act, actually cuts against bringing these back. And so, you know, sort of what I was saying earlier, the point was to create a more level playing field. The point was to try and simplify the code, to make it broad-based, to make the benefits of reductions in rates available to everyone. And so this fundamentally undercuts what was trying to be achieved with the Tax Cut and Jobs Act. And to answer your earlier question, I mean, we would look at it and say that none of the tax extenders should be brought back because they fundamentally distort the tax code.
So I'm probably I'm a lot more in Marc's camp of having not been a huge fan of the Tax Cuts and Jobs Act. I think that if anything, the tax extenders make a lot of the problems with the Tax Cuts and Jobs Act worse. I think that on the one hand, Tax Cuts and Jobs Act had a lot of parts of the legislation that are going to expire in 2025. They've already created this big cliff. We don't need to be adding more to it with the tax extenders. I also think, I'm going to disagree with Russ, even though we're in agreement on the extenders. I think that that law made the tax code even more complicated. According to the Tax Foundation, there are now more tax expenditures in the tax code than there were before that law. I think that we're not seeing Congress doing a very good job at simplifying the code when they have opportunities, and I think that the extenders really just double down on everything that's wrong there. And so we should be working to fix the tax law, take what was in the tax bill, make it better. If it works, get rid of it if it doesn't, as opposed to just adding even more complexity on top of it.
The House Ways and Means Committee a few weeks ago approved an extenders package that would, you know, offset the cost of renewing the extenders by making changes to the estate tax. And they also paired this with an expansion of some refundable tax credits that they didn't have to pay for at the time. Do you guys think if Congress decides they want to move forward on, you know, extending some or all of these, that it's important for there to be some kind of offset?
Yes, I mean, so CRFB's position is these zombies extenders should remain dead, but anything that we do renew, we should obviously pay for. We're probably at $1 trillion deficit by next year. Our debt is higher at any time in history other than after World War II, and we can't keep adding to it. And I think it was really disappointing to see, and we're seeing this a little bit in the Senate, but more in the House, that the solution to pass 2 years of extenders was to create a bunch of new extenders. And this isn't a critique of the policy to expand refundable credits. It's a critique of deciding to do it for just 2 years and not paying for it. And I think it's irresponsible, and it's creating a further culture that we're just going to keep doing tax policy 1 or 2 years at a time, which makes very little sense.
Yeah, I would just add that, you know, if there is a pay for, so I think the pay for in the House that was discussed in the House Ways and Means Committee doesn't pay for all of them, but just pays for just a bit. But if there is a pay for these extenders, then that implies that there is a trade-off somewhere else to, you know, for these extenders to continue. So I actually think that, you know, the discussion should be more like, let's just leave them dead, because there's going to be a trade-off, and for what? I mean, like we've mentioned, these things have been considered twice. Congress hasn't made them permanent. Let's just end them.
Why do you think that Congress tends to create tax breaks that often have expiration dates that are fairly temporary? And you saw this, you know, even in the Tax Cuts and Jobs Act itself, a lot of the provisions have expiration dates, whether it's the alcohol excise tax provisions that expire at the end of this year, or all of the individual tax changes that expire at the end of 2025. What do you think that, you know, Congress, you know, can't make every tax change that they want to permanent?
It's a gimmick. It's just like, I think Michael had said this earlier, the way the Congressional Budget Office scores policy, it's based on the law as it's written. So if the law says this policy is going to be in place for 8 years and then it's going to expire, and CBO says, okay, it's going to cost this much for 8 years, and then in the 9th year, the tax code is going to go right back to the way it was. We've seen in practice that's not how this works. The Bush tax cuts were a great example of this. They were temporary for a while. Eventually, Congress made the vast majority of them, except for those on the highest of the highest earners, permanent. And it adds a bunch to the debt, but at the same time, when you pass the bill at the beginning, it doesn't seem as expensive. I think if you were to look at how much the tax extenders cost on a 1 or 2 year basis, it's something like, what, $50–60 billion? But then if these provisions are made permanent, as they were, when extenders were around, being made permanent 1 or 2 years at a time, this is a practice that went on for decades. That cost adds up, but they don't have to deal with it in the first year. They pass it by having these temporary expirations, and I think that's really the only reason for it, because I don't think for the vast majority of these provisions, and I think it's also true of the tax bill, I think when lawmakers passed it a couple years ago, they wanted those provisions to be permanent. The only reason these are all temporary is for that budget.
I think there's also a political economy story, especially for these narrow subsidies. That the people lobbying for these, there's a benefit for them if they have to come back and lobby 2 years down the road. They keep getting a check. They keep the sort of whole Washington swamp keeps rolling, because it creates this opening where lobbyists and politicians can give out more benefits. And so that there's really there's neither incentive on the part of the politicians because of budgeting, nor the people lobbying for them, these things, to make them permanent.
Yeah, and I just wanted to add, so I mentioned during my opening statement, some temporary provisions make sense, like if it's for disaster relief or what have you, but playing devil's advocate, some of these like very niche special interest tax provisions that are temporary in nature, it might make sense to trial them for like a 1 or 2 year period and see if actually it makes sense to then make them permanent. But this is like a free trial that never ends.
Right, I mean, one
It's not
could
free.
imagine.
Yeah, it is free for that. Well, yeah, it's not free, exactly.
One could imagine a congressional budget process, right, a different process, tax process, where we did pass temporary tax cuts and we reviewed them every 2 years, not extended them, reviewed them and decided do they work, do they not work, right, just like we do with the discretionary budget. But that's not what's going on here. For the vast majority of these, as Ben said, it's just a budget gimmick.
What, you guys all talk about this being sort of like a giveaway to special interests, is how a number of you have described this. What special interests or what constituencies are lobbying the hardest on this, in your opinion? And, what would do they have any, good arguments about, this being helpful for their businesses?
It's probably more a question for the host of the office to tell us, so that we know who to intercept on the way to your office. But no, I don't think they have very many good arguments. I mean, for every business, obviously, they wouldn't be lobbying for it if it didn't benefit the business, right? So it's obvious there's a cash flow impact on that. But again, we've been 19 months expired, and you don't see a lot of these industries going out of business. I think they're doing just fine.
Let's shift a little bit towards sort of legislative process on this. You have Ways and Means who passed something out of the committee, but there hasn't been a House floor vote yet. In the Senate, there are sort of these working groups going on. And all of this is coming at the same time that right now the White House and Congress are negotiating some sort of spending cap and debt limit deal. So I'm curious, if these move, when do you sort of see them moving? Do you think they'll be added on to, any sort of debt limit budget deal that could happen, by the end of the month? Do you think it would be something that would be more likely to happen toward the end of the year? Sort of, what's sort of your sense of where things stand on this issue in Congress right now?
So we used to think of the deadline as the deadline, right? So the deadline would have been December 31st, 2017, before they expired, we could extend them. And then we thought, well, we can go a little bit into January. And then we thought, well, people don't actually pay taxes until April of the next year, so we can go into April. And now somehow, we're 19 months past the expiration. So that puts like my FAR deadline at, I don't know, 2028 or something like that. And my year deadline is as soon as today, because Congress could decide that they just want to pass this massive budget deal. We're already increasing defense and non-defense and veterans. Why not throw in some tax extenders and you know, everything else we want. So I think this could happen as soon as today and as late as 2029, but my hope is never.
I mean, I think the fear is that they get attached to something that must pass in the near future. What that is or what the specifics are is, you all probably have more information on that than I do. But that's the history of these things, is they're attached to something else that's more popular, because none of these things individually is all that popular. It's simply they're very narrow interests, and it has to be attached to something else. That's why Ways and Means in the House attached these to big expansions of refundable tax credits. That's the story. The little narrow giveaways are attached to much more broad popular provisions.
You guys have all been fairly active on this issue. Are there things you guys plan to do in the future to sort of continue to push beyond this event?
I was just going to suggest maybe we all go down the line.
Yeah, so, I mean, we certainly have already started. We've made a multi-million-dollar commitment to be public-facing with some of the tactics that I described earlier. There will be additional tactics moving forward. The most immediate term thing, assuming August recess happens the right way, is that we'll be doing district office visits with activists across the country in August. And then we're going to continue our digital ads, we're going to continue the mail that we're doing, we're going to continue making phone calls, and obviously the effort that we have with Federal Affairs on the Hill.
Yeah, so what we'll be doing, obviously events like this, hopefully joining the coalition as well. Just a lot of outreach. Our team is quite small, it's like fewer than 10 people, so just like one-on-one outreach with officers, House Ways and Means staff, Senate Finance staff, and just kind of working in coordination with the coalition as well.
I've got a new piece that I've only had time to print 20 copies of that outlines all of the extenders and the economic policy problems with each one, beyond them being temporary or retroactive. It goes through why the sort of policy reason why each one shouldn't be in the tax code, regardless of whether or not it's part of the tax extenders package. So that's the sort of immediate future, and then continuing to engage through Heritage Action and with the rest of the groups around the table to continue to keep the pressure to keep these things dead.
So actually, next week, PPI, we're doing an event with the House Blue Dog Coalition. We're each talking about some proposals we're putting out to build a better budget. On PPI's end, we're putting out a plan for we think is real tax reform that will build a tax code that's better and doesn't require these extenders. And the Blue Dogs will be talking about proposals they put out just yesterday for building a better budget process. And one of the planks of that platform was they came out and took a pretty hard line against tax extenders. And so I think they'll be talking about that more. And so I think we'll be working with them and working with any other members who are interested to try to promote a better tax policy that doesn't rely on these short-term extensions.
And the Committee for Responsible Budget, the Committee for a Responsible Federal Budget, when your name is that long, you have to say it really fast. It's going to continue to analyze new pieces of legislation that come out. For example, it turns out the House bill, if you extended it, would cost $900 billion. It's a little bit of money. We're going to continue to do convenings to try to gatherings and things like this letter from groups across the political spectrum. But we're also available to come in to your offices and talk to your bosses or your staff as you're working through this issue, as you're trying to think through legislative changes or how you want to explain this to your boss. So consider that an open invitation to email Adam Schiffers wherever he is. Don't email me, email him. And we'll come in and chat with you.
As you guys have been talking to lawmakers or staffs on this issue, what are you hearing from them? Are people pretty receptive to your arguments? Are they pretty resistant? Does it depend? Do Republicans have different opinions on this than Democrats? Do more centrist lawmakers like the Blue Dogs have a different opinion from those who are more liberal or more conservative? Or what are people's attitudes like when you speak to them about this?
I think the biggest thing is that regardless of how offices feel about the policy, and this sort of goes back to the question you asked earlier, regardless about how you feel about the policy of particular extenders, I think pretty much everybody understands that the extenders process doesn't make sense. And I haven't seen a whole lot of clamoring for this retroactive idea that, we really need to make retroactive tax extenders permanent for these activities that happened a year and a half ago. So I think kind of the broadest theme is that nobody, even the people who are voting to support extenders, think this process is working or makes sense.
Yeah, I agree. I think the one thing I am worried about is, it might actually conversely be more effort to kill them than to attach them to something. It seems like there's a lot of effort involved if we want them dead, to remain dead.
The thing I've heard from a lot of offices is the need for specific policy rationale for letting any one extender die. That we tend to, as I've said several times, lump these all together, but offices that I talk to, well, why is this one bad? Why is that one bad? So I think it's just asking for information about what are these individual provisions, and if there are ones we like, why do we like them, and why should we be disconnected from others? But more, why are each individual one bad economic policy?
So I think there's some offices that either just strongly oppose the extenders process or strongly oppose not paying for them. And that's what we saw a little bit in the Ways and Means Committee markup. I think there's some offices, and a lot of these are more parochial than partisan, that have a specific extender that's really important to them because it's important to a business in their district, and they kind of don't care about the other ones, but they think it's a package. But I think the overwhelming majority of opinion is these are bad policy, but there's a fatalism to it. But they're going to happen because they're going to be put in a package, and then we're going to vote for it. But guess what? That's not how it works. If there are 80 senators that think these are bad policy but they don't happen, that means that they don't have to happen, right? All you need to do is tell leadership, we're not going to support these. They've been dead for 19 months. Let's try another 19, see how it works.
You just said they've been dead for 19 months. Why is that? Do you feel like it was a deliberate choice to have them dead for 19 months? Do you feel like it was just sort of just happened that way because there was the House split from Republicans to Democrats and they didn't do an end-of-the-year deal last year? What sort of, are they dead by choice or are they dead just by circumstance right now?
I would say they're dead by choice for the reason of the Republican tax bill in 2017 when these things died. Congress had a chance to pass a major piece of tax legislation at the end of the year, right when these policies expired, and they decided not to include them. Actually, I take that back. I think there were some that they did end up including, and so I think that shows that they were able to evaluate them. They said, here's what we want to keep, here's what we want to double down on, here are the new tax expenditures we want. I think by virtue of the fact that these extenders weren't included in that bill, I think that's all the evidence we need that it was an intentional decision.
Well, and not only that, I mean, I agree with you that that's enough to show some deliberation in the process, but there were plenty of people who came out and made public statements that was the intent and the purpose, right? So for a long time, there have been leaders who have been signaling in both parties that both the process and the policy itself is not good. And in fact, most of the offices that we've talked to will acknowledge that. But to Marc's point, there is a certain fatalism about it. It's like everybody says it's a bad idea, so it's going to happen. And that seems to be an odd thing.
Yeah, and just adding to Ben's point about 2017, I understand that was a partisan exercise, but in 2015, the Obama administration signed what was a very bipartisan exercise that was specifically focused on which extenders to keep and which ones to let go. We chose to let them go. So I think it was very intentional that they were allowed to expire. Now the question is, some people want to bring them back. Why haven't they already? The answer is because they're not popular enough to bring back on their own, because everyone decided they should expire. So they're waiting for some must-pass legislation, and they're going to sneak it into that. And there hasn't been any hasn't been much must-pass legislation since that time.
I just want to read a quick quote I have here from Kevin Brady, who is the architect of the Republican tax law, from last February, and he was talking about extenders. It makes zero sense to trudge on with all provisions that serve a different purpose in a different tax code during a different time. I feel like that's,
That's one of them.
yeah, that's one of them.
He said similar things in 2015 when the bill was passed that we've been talking about. So there's plenty of evidence that there's no reason for these.
Before I turn it over to the audience, I'm curious, do you guys feel like you guys have any disagreements on this issue? Or are you guys completely in lockstep? And if there are any disagreements on, extenders specifically, what are those?
I would say that there's probably, I think that if this weren't about the extenders process and we were to go provision by provision, do we think this is good policy? Do we think that in an ideal world this provision would exist? My guess is that there will be some where we would all agree, some where we would disagree. But I think that, as a package, whereas members may say, I like this one provision, but I hate the other 19, but I'm going to vote for it anyway. I think we would all agree that even if we do like this one individual provision, it's not worth it for the package.
I think everyone's nodding their head.
Want to see if we can take audience questions? Yeah, in the back.
Carl Polzer, I have a project called the Center on Capital and Social Equity, which promotes the inclusion of low-income workers in the economy, so appreciate that. But anyhow, in terms of this issue, is there any way that the leadership or somebody in Congress that's trying to kill this stuff could offer the industries that benefit from it a deal where they could get a temporary extension if they could get together of half the amount of money and decide how to divide it up among themselves? Or some kind of, is there a way to shrink it and let them be publicly dividing it up among themselves?
I would say that we sort of had that with the tax bill from a few years ago. I mean, Republicans took an effort at this big, supposedly comprehensive tax reform. I mean, that is exactly the exercise you're talking about. So I feel like we did go through that process, and these are now those businesses coming back and saying, we got our massive corporate tax rate cut and all that. We understand we didn't get the extenders, but we kind of like to have those back anyway too. So I think the answer is we did try that.
And there's been efforts to, at various times in history, say, we've decided this one should be phased out over a couple of years because we've come to some agreement with industry that they are not going to come back and ask for it. What we see is, as soon as it starts to phase out, they're back again asking for it to be extended. So I don't have a lot of faith in that actually working out, even if it was possible.
In the front here.
Hi, Steve Estes from ALEC. I would assume that Democratic members of Congress are not in favor of extenders for both cronyism and revenue reasons. So, but this bill had to have passed a House of Ways and Means Committee in a democratically controlled Congress. So I was wondering why Democratic members of Congress are signing on to a lot of these extender provisions. Is it for climate change policy with energy and environment extenders, or for other reasons?
We have two Democrats here, maybe could weigh in.
I don't know that I want to speak for those offices. I will say that I know that there were a few Democrats who voted against the unoffset extenders on the committee. I think another part of it was, as I think Marc mentioned, maybe somebody else, that they were paired with this expansion of these refundable tax credits for low-income people. So I think that's probably part of it. But I would say I'd say some, didn't support the unoffset extenders, and the others, I would say you should ask them.
So just to clarify, the refundable tax credits were a separate vote from the extenders package in Ways and Means, but the extenders were part of the same bill as disaster relief in Ways and Means.
I'm just upset that Marc assumed my political affiliation.
I didn't say which two.
Yeah, I don't really have anything to add apart from yeah, there was a few members that did insist on the pay for, which was good to see on the Democratic side, in my opinion.
Look, support and opposition to extenders are actually both bipartisan. So you might think it falls certain ways, but that's just not how it's been. I mean, for example, again, check out our letter. We have some groups that are very far on the left and very far on the right, but the support is equally diverse. And I do think that even though it wasn't technically the same vote, what allowed this to even get a vote in the first place was packaging it with big increases in the EITC and child tax credit.
I guess I would also add that I think there is also a bit of a minority-majority party issue. I think it's always easiest for, I think you're going to tend to see that the party in the majority is going to vote for the extenders and the party in the minority is going to use it as an opportunity to vote against, even when, you know, if the tables were turned, they would do it the other way. I think just the history of extenders has shown that to be the case.
Over here.
Hi, I'm Richard Phelps from the Senator Sanders' office. I guess my question was sort of what you see as kind of the future, because I see there as being maybe multiple zombies. There's sort of the 2017 zombie extenders. There's a couple 2019 zombie extenders, which have been kind of thrown into this package. And then there is basically the entire world of the TCJA, which I think has kind of two categories of stuff that goes into effect, which is something like a modernization of the research, which I haven't talked to a single person who thinks is going to go into effect, but is worth more than this entire package. And then there's stuff that is going to expire, like the expense. And so I'm just wondering how you all think about not just the 2017 extenders, which maybe there is a chance could die, but then these sort of different sets of future zombies and how to deal with those.
Ben wrote an excellent Game of Thrones themed op-ed that I didn't really understand.
You didn't understand it because of the Game of Thrones part, not because of the
Right.
extenders.
But our philosophy here a little bit is fight one set of undead creatures at a time. So we are currently focused on what we call the zombie extenders, the ones that have already expired. We know that right around the corner is the 2019 ones, and then this whole TCJA. I think they're all going to go in different paths. Our organization's position is going to be similar on them, although there's some that I think we would say make permanent and pay for, as opposed to the zombie extenders that are almost all special interest. But our tactics will be different, our timing will be different, but we realize there's only so many undead we can fight at once.
And I mean, I think that the TCJA, unfortunately, one of the things I didn't like about it was that it had so many temporary pieces to it. Almost all of it expires in 2025. Some of the best provisions, like expensing that you mentioned, starts phasing out in 2022. So it's going to be important to make sure that those broad-based pro-growth pieces of the TCJA aren't lumped into the sort of special interest, narrow provisions that we're talking about today.
I think you can kind of look at what's going on with the extenders today as a test case for, you know, as a preparation for it, for the coming expiration of the tax bill. I think, you know, unfortunately, like I said, it's not like we haven't been here before. We did see with the Bush tax cuts, we've seen with extenders over and over again, but I think that, you know, also the current Congress right now is very different than the one that was here when the Bush tax cuts expired. I think that for a lot of them, this might be their first extenders exercise, especially given how many new freshmen there are. So, you know, I think this is the first time to try this fight, and then, you know, like the offense, you know, winter's coming for the big extenders package and of the tax bill, and we get ready for it.
Do you guys think that the fact that we have this looming presidential election, does that play any role in how you guys are discussing the extenders issue in any way?
I feel like, I'll let everyone else speak for themselves on this. I feel like the extenders are probably not going to be a big presidential campaign issue.
I think Elizabeth Warren has a plan for that.
But I think for Republicans, these are the embodiment of the swamp. This is something that comes to life every couple of years and is just the sort of lobbyist, politician circle that keeps going on. And so from that perspective, I think it does have at least some connection, as Russ was talking about, to sort of the general political mood.
Yeah, I would tend to agree. I think that, you know, in my opening statement I mentioned that both parties really benefit, I think, by ending this bad practice. So
Yeah, I mean, certainly in the context of what I talked about with our Unrigging the Economy campaign, I agree with Mark that nobody knows what tax extenders is beyond this room and a few other people, right? But the vast majority of Americans feel like the system is broken, the process is broken, and these sorts of things only serve to reinforce that. And so I do think there's an opportunity to drive home the idea that we need to be looking at process around tax extenders and lots of other things. And we're going to try and do that.
And have any of you talked to the White House about this issue, or have any sense of, you know, what the White House thinks about the extenders, or is this more of a sort of like a Congress-driven issue?
I mean, I can definitely say this is more of a Congress-driven issue. That's where it's being compartmentalized at the moment. When there is legislation, the White House may review work on it. They did not include any extenders in their budget, for what it's worth. But it doesn't tell us too much.
And they did kill a couple non-extender subsidies in the tax code as well for plug-in electric vehicles and one other one. So it seems like they're on the side of letting them die.
Any other questions? Aaron.
I am Aaron Lorenzo with Corporate Code. Could each of you identify the extender you find most offensive?
I'll go first, so I'll just take the easy ones, race course and racetrack. Two.
You picked two. That's dirty.
Any tax break around a sport that involves racing.
You know, I don't think it matters whether it's racing. I think any tax break is just what the particular sport is.
Yeah.
I think about a lot of the alternative fuel credits are some of the worst, whether it's biofuel or alternative energy. They're all incredibly complicated and hard for the IRS to police. They're rampant with fraud, hundreds of millions of dollars of lawsuits, people taking these credits when they shouldn't. So these are some of the most slam dunk. We should get rid of these pieces.
Yeah, so Mark stole mine, but I mentioned those in my opening statement, so I think I can claim them.
And I'm just going to cop out and say we're opposed to all of them. It's really not a one versus the other. We just think it's bad policy across the board.
You want to follow up? What's the
Is there a minute?
Yeah.
So, which extender is the most important for all the others to ride along with?
So I think that's the interesting thing about this extenders exercise as opposed to the previous ones. Is I think in the past there were those ones. The R&D tax credit was I think one of the big ones in the past. But I don't know that, and maybe Mark, I don't know if you have a different opinion, but I don't think there is a really particular big one this time. I think it's really just this hodgepodge, and that's why they've had so much trouble passing on their own.
Yeah, I think that maybe the biofuel one is maybe the most important, certainly the largest, and there's some big players in the Senate who are interested in keeping that around, I think.
Just quickly follow up on the other side of that. Is it the fact this is being done to the tax code? So the corporate rate's gone from 35% to 21%. So there's nominally some sort of less appetite for deductions, exclusions, that sort of thing. And in fact, there's a number of companies, and I think one of your co-signatories did a report on it, that have no tax liability. So there's zero appetite for tax credits. I mean, do you think that declined interest in sort of tax assets is also driving sort of the lack of progress on these?
One would hope so, but I think what's driving the lack of progress is that we already extended all the popular ones. This is I don't use this word, but anyway, this is sort of the garbage that was left over, right? These have been riding with the popular ones, with the AMT, with the R&E, etc. We passed all those, and so this is these are the crumbs, and I don't think they would be popular at a 35% rate or a 50% rate.
I have time for maybe one more question.
I'm Mike Derulli with US Debt Forum. We just discussed which extenders are the most offensive. And I'll open this up to the audience also, because I don't want to put anybody on the spot. Which elected politicians are the most offensive in pushing each one of those offensive extenders?
I think you're probably going to have to open that up exclusively to the audience, unless any of my co-panelists want to answer.
Okay,
that.
anyone in the audience, please. A name, an individual?
So I'm actually going to tag team off of the last question for a second. Marc is right that there are a lot of people who, the reason this doesn't have as much momentum is because these are the ones that weren't made permanent in previous pieces of legislation. But let's be honest with ourselves that even though most people generally think the policy is a bad idea, that if we had to prognosticate whether or not they're going to be attached to a must-pass piece of legislation and ultimately extend it, the answer probably would be yes at this point in time. And I think to an earlier question you asked around sort of public awareness in the context of a political election cycle, there's something really sort of repugnant, maybe too strong of a word, but in an era where everybody literally accepts that it's bad policy, and you have offices that look at 20 tax extenders and say one of them is significant to a constituency in my state. So as a result of that one piece that we recognize as being bad policy, but it's significant to someone in my state, I'm willing to pass 19 other pieces of bad policy. And to us in Washington, that doesn't seem abnormal. That's the way things happen. But to the average person, that is troubling, right? And it's how we end up in a scenario where we have a $22 trillion debt and we can't get things done and we can't get good reform across the table. So I think one of the things that is candidly exciting about the fact that we've got some far left groups and some center groups and some right groups here, we disagree on some stuff. I mean, I would say on Tax Cut and Jobs Act, it wasn't perfect. There are things that we can do to make it better. It should have been paired with some fiscal restraint. And we made that case. But there are things that I think our groups can do together to find common ground to actually push these issues that should be a no-brainer. And so I really just appreciate the fellow panelists here.
I'm actually going to go out on a limb a little bit and try to answer a variant of that question. I don't know that I necessarily want to say who's to blame for it, but I will say that, you know, the decisions about what's going to happen with these extenders, you know, they're going to be made by leadership, and they're going to be made by the chairs and ranking members of the relevant committees. And so I think, you know, if you're thinking who are the politicians who we want to pressure to try to kill these extenders, you know, I think those are going to be the most important focal points.
Any more questions? Thank you everybody for coming to this event, and I guess if you have any more questions, you can talk to any of the panelists.